Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Today, we will unpack the untold story of one of India's leading private sector banks. For the last 2 years, Kotak Mahindra Bank has faced series of challenges. Regulatory restrictions to onboard new customers, a lackluster stock performance, to name a few. But with its quarter three results, Kotak Mahindra has shown not only resilience but strategic foresight. There is a lot to unpack. In this video, we will explore how Kotak is navigating through these hurdles, why analysts are optimistic about its future, and what this means for investors like you and me. We will dive deep into the numbers, industry trends, and growth drivers that can potentially change the trajectory of Kotak Bank in 2025. Now, before we start analyzing Kotak Mahindra Bank, I want to give you some basic understanding about what we should study while we are analyzing banking stocks. Now, there are various parameters that I want to go through quickly, which will help you understand the health of a particular banking stock. The first important parameter to examine is the net interest margin. Now, what this indicates, it indicates the bank's profitability from core lending operations. The second parameter is asset quality. Gross and net NPA ratios, which reflect the quality of the bank's loan book. Thirdly, capital adequacy ratio measures the bank's ability to absorb potential losses. CASA, again, CASA ratio indicates the proportion of low cost deposits. CASA basically stands for current account and savings account, impacting its profitability. Return on asset and return on equity, well, they measure the overall profitability and efficiency of the operations. Credit to deposit ratio. Now, this reflects the bank's ability to convert deposits into loans. The basic business of bank is to take deposits and give them as loans. The difference between the two interests is the earnings of the bank. Cost to income ratio, which indicates operational efficiency, right? And loan book composition provides what are the different kinds of loans that the banks give. Well, this provides an insight into the bank's risk profile and growth areas. So these are the basic 8 parameters on which a banking stock is examined. To start with, let us first check the quarter three results of Kotak Mahindra Bank. Now, consolidated net profit increased by 10% year on year basis to 4,701 crore rupees. Net profit rose 10% to stand at 3,305 crores. Net interest income grew also at 10%, standing at 7,196 crores. Net interest margin, a very important parameter in the banking sector, stood at 4.93%. Advances grew by 16% year on year basis to 4,33,386 crore rupees. Deposits increased by 15% to reach 4,73,500. Talking about asset quality of the bank, the gross NPA ratio slightly increased to 1.50% from 1.49 in the last quarter. Net NPA ratio stood at 0.41. CEO Ashok Vaswani said, I'm quoting him verbatim, that despite economic headwinds, the bank has achieved 15% growth in advances and 16% growth in deposits. We saw that from the results, right? And the bank has made significant progress on technology front to address RBI's concern. So hopefully with the changes that they are making on the technology front, the ban that RBI has put in place will go away in the near future. If you are unaware about the restrictions that RBI has put on Kotak Mahindra Bank, in April 2024, RBI imposed restrictions on the bank to by banning to onboard new customers through digital channels. It had prohibited the bank to on issuing new credit cards. Now, these restrictions were put in place due to concerns about bank's IT infrastructure and frequent service disruptions. Let us look at the broader picture into the banking industry overview. Now, private sector banks have been outperforming their public sector peers in terms of growth and asset quality. but public sector banks are showing signs of improvement. Some key trends in the banking sector, well, continued focus on retail lending and digital transformation, increasing competition from fintech companies and small finance banks, growing emphasis on asset quality and risk management. Outlook for this year 2025, well, there are potential RBI rate cuts in February which could boost the credit growth of banks. Trump policies may impact global trade, affecting certain sectors, right? And the overall banking sector in India is expected to benefit from India's economic growth. So these were some of the potential outlook for current year. Let us now go through some key fundamental factors which we have not covered previously in this commentary. The return on asset for quarter 3 in this financial year stood at 2.24%. Return on equity stood at 13.8%. Capital adequacy ratio stood at 22.8%. To check the efficiency of the banking operations, cost to income ratio stood at 47.24%. Now, when it comes to valuation of the bank, PB ratio stood at 2.68, PE ratio stood at 15.82 in comparison to the industry PE of 14.66. So, PE ratio of the bank is on a slightly higher side. Let us go through the technical analysis reports. Now, following the quarter 3 results, the stock showed strong momentum, gaining 9% today. It closed at 1920 levels. Now, it is currently trading above its 50-day and 200-day moving averages. Key resistance level to watch are 1900 and 2000. So, it has already passed the first one. Now, the next level to watch out for is 2000. Support levels are at 1700 and 1600. Let us compare Kotak Mahindra Bank with other private sector banks. Now, HDFC Bank and ICICI Bank, two major players in the private sector space, are going to declare results on the 22nd and 25th of January, respectively. When it comes to advances, HDFC Bank has a higher loan growth at 18.4% year on year basis in comparison to the 15% of Kotak Bank, right? The net interest margin of HDFC Bank stands at 4.1% for quarter 3. Compare it with 4.93% of Kotak Bank. When it comes to ICICI Bank, the loan growth for ICICI Bank is 18.8% year on year basis, and it has not declared other results, but the net interest margin stood at 4.53 for the second quarter of this financial year. Axis Bank, the loan growth stood at 22% year on year basis, whereas the net interest margin stood at 4.11 for quarter 2 of this financial year. The net interest margin of Kotak Mahindra Bank, which stood at 4.93, stands out amongst its peers. Now, what does this show? It shows strong pricing power and efficient asset liability management on part of Kotak Bank. Several brokerage houses have upgraded Kotak Bank to a buy recommendation following their quarter 3 results. Now, Nuvama has upgraded to a buy recommendation with a target of 2040 for Kotak Bank. Motilal Oswal has also upgraded the stock to a buy with a target of 2100. Systematics has also retained its buy recommendation for this stock. The consensual view of the analyst is positive, citing strong fundamentals and potential upside from the lifting of RBI restrictions on the bank. To conclude, Kotak Mahindra Bank has delivered a robust performance in quarter 3 in spite of challenges. The bank's growth and profitability metrics are impressive, but investors should also look out for resolution of RBI restrictions on its business and the broader economic factors. As usual, do your own research, consult a financial advisor to align your investments with your financial goals. That is the proper way to start investing. Now, this video was for educational purposes to help you make informed decisions. If you have liked the video, please like, share, and subscribe to our channel for more such educational and informative content. Until next time, stay safe. Goodbye.